You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. This is Financial Survival Network. I'm your host, Kerry Lutz. Well, we got a recession. If it's not here already, it'll be here very shortly. And basically, what do you do to prepare for it? If you're a business owner, how do you get ready for what's about to hit? And Grant Bledsoe is with us. Grant, you're a financial planner, and you work with small businesses in money management, in retirement planning, in cash flow management, et cetera. So let me ask you a question. Is the recession coming?
It probably, as you put it, we might be there already. If you look at all the numbers, we're not quite there, but things seem to be slowing down a little bit. What we're doing with our clients at this point, and just to provide our listeners a little bit of context, I run a financial planning firm. We work with business owners to help them optimize cash flow, reduce taxes, and invest prudently. And so for that demographic, a lot of small businesses really struggle with how to handle their cash, both in good times and bad. And I think a framework that really works well for business owners in any economic environment is probably applicable now. And regardless of whether we're headed into a recession or not, or whether we're already in one or not, I think everybody needs a good framework for handling cash. And I can describe what that is if that's helpful. But from my perspective, how people handle that is kind of irrelevant. You need an operating model that's going to work when the economy is working in your favor and when it's not, because that's simply something that's not in our day-to-day control. So a lot of this comes down to how your business is organized. If you have a pass-through entity, either a sole proprietorship or an LLC or an S corporation, it doesn't matter from a tax perspective whether cash in your company's bank account stays in the bank account at the end of the year or whether you take it out and pay yourself. And one thing that I think a lot of small businesses struggle with is, when do I take cash out? How much do I pay myself? How much do I leave in the business account for operating purposes? And I think of it kind of as an emergency fund. The Financial Planning 101 for your personal finances, you need to start with a little bit of cash in a savings account available to you for a rainy day, so that you're not compelled to dip into your retirement accounts or your investments at an inconvenient time when the market is down. Same goes for your business. And I think most businesses should probably shoot for somewhere between 3 and 6 months worth of operating cash. So if you pull your profit and loss statement from QuickBooks or your bookkeeper, and you look at your ordinary monthly operating expenses, how much does the business need to survive? Multiply that by somewhere between 3 and 6 based on your comfort level. That's the amount of cash you ought to have in the business. And so the kind of long-winded way to get back to your question, Kerry, is I think I'd start with, how much cash do you need for your business emergency fund? And if we're expressing it as a function of your monthly operating expenses, if you're concerned about the fact that we might be headed into a recession, if your ordinary emergency fund is 3 months worth of operating expenses, well, then you might let that swell to 4 or 5 or 6 in preparation of revenues drying up a little bit. Obviously, the other things you can look at are reducing those operating expenses, or maybe changing your contracts with vendors to allow for you to pull back on those expenses a little bit if times really get tough. But really, I think the core framework ought to revolve around, how much cash do you have in the bank? If you have more than that amount, 3, 4, 5, 6 months worth of cash, that's when you think about pulling it out into your personal bank account and doing something else with it.
Right. And hey, when it comes to like receivable management, a recession's coming. There's potentially going to be a cash shortage, and it's going to be harder for your clients to pay you. So maybe it's a good idea to put in incentives to get paid up front to limit your extension of credit to only those who are the most credit worthy, and that can help you get through it as well, right?
A great point. Yeah, this varies a lot by industry. Receivable management is more important in some industries than others. But yeah, I think we probably have to lower our expectations of how much of those receivables you'll be able to collect. And the more cash up front that you can get, the better. And if that comes from some kind of an incentive program, maybe you reduce your prices a little bit for people who are willing to pay all up front, or you're only extending credit to the most credit-worthy organizations, that's another great avenue to consider.
Right. All right. So where do you think most business owners go wrong? You deal with a lot of business owners. Tell us, where do they go wrong?
Don't just survive, thrive. The Financial Survival Network.
Osino Resources is a Ross Beatty-backed gold exploration company in mining-friendly Namibia. Osino's district-scale land package is situated near 2 producing gold mines, one of which Osino's management team previously developed and sold to B2 Gold. Osino's founders and management are experienced mining professionals who have already successfully developed and sold 2 companies in the past 7 years. Osino has an excellent shareholder base, with Ross Beatty owning 20%, insiders 5%, and Resource Capital Funds 8%. This is an exploration company with drills turning that you'll definitely want to pay attention to. Osino trades in New York under the ticker OSIIF and in Toronto under the ticker OSI. To learn more, go to osinoresources.com. That's osinoresources.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
A lot of it has to do with the cash management. A lot of it has to do with tax planning and their own personal financial planning. So the biggest mistake or the biggest misconception I see is proprietor or entrepreneur goes out and starts this business, and they assume that if I pour everything into the business and can make it a success, by definition, I will be financially successful myself. That definitely helps, right? Entrepreneurship is a wonderful lever of wealth building for a lot of people. It's a great way to become financially successful, but it is not an inevitability. You still have to do the work and put some money away on your own, diversify out of the business in order to be financially successful yourself. So that's over and over and over again. That's where I see people go wrong, is they put their own personal financial planning for themselves and their families on the back burner, because they think that if I just focus everything on business success, drawing cash into the business, and if I can just make that part work, then I will inevitably be financially successful. And that's just not a guarantee.
And I've made that very same mistake myself, Grant. And but it's hard to convince people. You're on a mission, you're going to build your company, and once it succeeds, then you're going to benefit from all the trappings of success. But you need to plan for success, don't you?
Exactly. You speak from experience, Kerry. I'm not saying that people should not focus all their attention on building the business and making it successful, because that will be a wonderful lever of your future success. But just keep it in the back of your mind that that's not the only thing that has to happen. And at some point, when you get some momentum and start to make that thing profitable, you're going to have to put some more mechanisms in place and pay attention to your own personal objectives to make sure that you're on an adequate trajectory. And oftentimes some really great mechanisms for that are a qualified retirement plan in the business. You can set up your own 401k. It's a great benefit for employees. It's a great retention tool. It's a great way to put money away on a tax deferred basis. Other benefits that you can put in place in the business that will benefit yourself that an ordinary W-2 employee may not have access to. There are a lot of avenues, there are a lot of arrows that you have in your quiver. And I think that's exactly right. You do need to focus all your attention on making this thing successful first. Just remember that there's other stuff you have to do at some point along the way.
All right. So you have to plan for success. I mean, I think that really is key. And that means different things to different people. In your travels here, what's the biggest mistake you saw one of your clients make?
I've seen people make 6-figure tax mistakes in the past with regard to, specific retirement plan rollovers, putting the wrong amount of money in the wrong account, There are a lot of technical things that people tend to screw up that cost them a lot of money. I've also seen people not put cash into the company 401k plan when they were compelled to by the way it was set up. And so they have to pay a bunch of back penalties and taxes. And that's a huge cash flow suck. If you head down a wrong path, let me put it this way. If you make a commitment in the business to establish something like a 401k or a simple IRA, you're making a commitment to putting in a little bit of money on behalf of your employees. And if you forget to do that or get headed down the bad path where you don't have the cash to do so, that can compound and really run you into trouble. And I've seen a number of those cases over the years, and it's cost people multiple six figures if you do it wrong.
Yeah, that can be costly. All right, Grant. Well, we really appreciate your coming on. Can you just tell us your website, how we connect with you on the web and find out more?
Sure. Yeah. We're all over the place. You can check out threeoakswealth.com. It's spelled out. It's our financial planning firm. I have a blog I write on. It's called Above the Canopy, abovethecanopy.us. And I've got a podcast where we talk about this stuff as well called Grow Money Business. So Google any of that stuff and we'll pop up.
Excellent. And if you got a question for Grant, shoot me an email, kl@kerrylutz.com. Make sure you go over to the site, to the show notes. You can click the link and you'll get right to Grant's site, to Three Oaks. And Grant, appreciate you coming on. We'll talk to you again soon.
Thanks for having me, Kerry. That's great.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.